Coming up, why investors are going cuckoo for Swiss stocks, and why politics and protest add up to a pounding for Egypt's currency. I'm Jamie McGeever and this is Market Pulse. But let's start with today's bond market action here in Europe, where France pays its lowest rate ever at auction to borrow 10-year funds. For more on that, I'm joined by Reuters bond correspondent Will James. Will, a record low yield of 2.07% that France paid today. Good news for Paris, obviously, but is this as good as it gets for France?
It's difficult to say. I mean, this bond, the 10-year in particular, had been flagged up as good value relative to surrounding bonds beforehand, so that explains the good demand there. But yields are extremely low. There's still some juice left in the trade over Germany. We're not quite at the lowest spread levels there. We're at about 65 basis points. We got to around about 50 basis points late last year. So depending on which way you look at France, there is maybe some more room in that.
So is France, I mean, you're talking about the spread over Germany, 65 basis points. That would suggest that France isn't core, but is France core or not?
Depends who you talk to. There are plenty of traders that we speak to in Europe who are willing to who are keen to short France, but they're not willing to go in on that trade yet. You know, the Depardieu trade. They don't want to pull out of France, and part of the reason for that is that there's so many Asian central banks who love French debt, love that pickup, and still treat it as core. So it's difficult to go against the weight of buying from elsewhere in the region.
That's France. Spain today, the 10-year yield nudged or flirted with 5%, going below 5%. Is that on the cards? And if so, is that a big deal?
Yeah, well, 5% would be interesting to see yields fall below that. Whether it's a big deal, I'm not so sure. There's so much still to be decided in Spain. Not a lot has changed in terms of whether they're going to get a bailout or not. We're still in limbo there, really. What the real test will really be in January is the supply, January, February, March, first quarter.
How much have we got coming up from Spain?
Well, we've got a lot. They need to issue, we estimate, or taking what banks think, around about 100 billion. That could rise easily to 120 billion if they need to finance their regions, which they do at the moment. So to put that into perspective, that's 5 billion euros every bond sale every 2 weeks for the whole year. So it's a big ask.
So that's a lot. OK, Will, thank you very much. Well, Swiss equities today charging ahead, playing catch-up to the US fiscal cliff euphoria from yesterday. The Swiss market was closed on Wednesday and today is looking to make a sustained break above the 7,000 mark. Today's high of 7,003 points is a peak not seen since September 2008. And of the 25 top gainers across Europe today, no fewer than 9 are Swiss. In Egypt, the Muslim Brotherhood is discovering the headaches that come with power. The Egyptian pound on track for its biggest weekly fall in a decade, down more than 3% against the US dollar, hitting a record low of around 6.42. That compares with 6.18 last week and comes after the central bank signalled on Sunday that it no longer had enough reserves to defend the pound. The roots of the problem, of course, go deeper than that. There's a big hole in Cairo's budget after the Brotherhood postponed planned austerity measures in response to street protests. The postponement also threatens to nix a planned IMF loan. Well, that's all for today's Market Pulse. Tune in at this time every weekday for your daily dose of what's moving on markets and why. I'm Jamie McGeever. This is Reuters.